Hello traders, Gary Wagner here, 11:53 in Honolulu, 5:53 in New York on Tuesday, 24th day of January 2023, and this is the Daily Report for Gold and Silver. Before we start today's show, I do want to remind our subscribers that I will be a speaker at the VRIC conference beginning on January 29th through the 30th at the Vancouver Convention Center, the West Building. For those available, hope to see you there. Traders, as we get closer to this week's report on December's core PCE, as well as the FOMC meeting next week, gold continues to firm in price. Currently, we have gold up just about $10, with the February contract fixed at $1,938.60. We did issue a trade alert last week, getting in at 22. We did raise our stops to a break even. However, it was reported to us that many people entered the trade at our price suggested. However, they did not move their stops up and still have an active trade. On today's show, I want to service both members that are still long as well as members that got out at a break even. The dollar was down today by 0.24%, giving mild tailwinds to gold and silver pricing. The dollar is currently fixed at 101.675. And lastly, silver gained back part of yesterday's decline, increasing its value by a total of 1% or 23 cents, with the most active March contract currently fixed at $23.79. This first chart is a daily candlestick chart of gold futures. It is a chart that we have been using quite frequently. We first started talking about the high achieved in March, and then a series of lower highs as well as lower lows that marked a multi-month correction that terminated towards the end of September. And then on November the 3rd, it hit the lowest trading price point at around 1620 and entered this stage of a dynamic rally, which had a series of higher highs and higher lows, definitively telling us that we were no longer in a corrective period, but more importantly, have taken us to our current pricing at $1,938. Now, we did enter a trade last week, and then we raised our stop to a break even. I reported that yesterday. However, we got multiple emails from subscribers that went long in the market taking our call, but did not move their stop up, and therefore are currently still in an active trade. So I want to address both subscribers that broke even on the last trade and where and how to re-enter the market, as well as possible suggestions for moving stops up for those that are still long. To that end, we will cover that in detail in the proper action section that exists on today's members page. I still believe that this current level is a level of resistance at roughly $1,940. We have made 3 attempts as of yesterday to move above that price point, and on a closing basis, we have yet to take that out. When I enlarge this chart, you can see that it opened and closed below 1939.40. We're currently at 1938.70, and so we have had yet another attempt to breach this first glass ceiling. If in fact we can take this out on a closing basis, the next level of resistance, and that comes in at 1678. We've based all of our resistance on different areas. For example, our upper level resistance area comes in at $2,000, and it also corresponds to the high right here at $2,000. Then we look at the price point below it of $1,967.60, and that is based upon this top here. And lastly, This most recent top that we've been talking about is based upon these recent highs in which there was a failure to break and trade above them. These are the most important price points to watch out for. Realize on Friday, core PCE will be reported. It is expected to show a decline from 4.7 in November to 4.4 in December. If the actual numbers correspond with the forecast, that would be a bullish supportive factor for gold. Then we have the FOMC meeting next week, which has been largely factored in if in fact they slow the pace of interest rate hikes and only implement a 0.25% rate hike next week. Those are things we want to keep in mind, and those will be the fundamental events that are the end product of whether we see gold continue to stretch to the next level of resistance at 1968, or if this becomes a retracement area and we get some sort of a correction. Because aside from the first move right here, in which we saw a tremendous rise from 1621 to 1800 and a respectable 23% correction, gold really broke out of that mold. We would see periods of price ascent followed by consolidation. Again, we saw price ascent. We saw the market consolidate, but now we're getting a series of higher highs on the day. But on a closing basis, we still need to see it break above 1940 to round that out. Traders, lastly, I do want to finish off, as I did yesterday, with a discussion on silver. On yesterday's show, I really looked at the fact that we had a Fibonacci extension, which began at approximately 1740 up to 2127, and then we began our extension from approximately $18. We then plotted the 1.618% extension. That comes in at $24.35. And what we spoke about is the fact that although we had some highs, one closing price and two opening prices, for the most part, silver prices have remained below that, and that has served to be ultimate resistance. What I've added is a basic Fibonacci retracement, and the retracement begins at the same price point, 1738, 1740, but it goes a little bit higher up to this top here, so that our first support level comes in at roughly the 23.6% retracement at precisely $23.02. That being the case, we did see silver recover, but we are still well within this consolidation band, and we would really need to see silver either trade lower and bounce off of the 23.6% retracement, or have a defined break above $24.35. That would indicate either a break to the upside or a possible correction and recovery. For those trading silver, use that as your parameters to guide you. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Have a great day. Bye-bye.